Hello everyone. In this video, let us learn how to solve adjustments on provision for doubtful debts. In admission of partner and retirement of partner, in 12 marks questions, we will get definite one adjustment on provision for doubtful debts. So, here I have taken so many adjustments which may be appear in your board exams on provision for doubtful debts. One is provision for doubtful debts increased by 10%. Provision for doubtful debts maintained at 30%. Provision for doubtful debts increased by 2000 rupees. Provision for doubtful debts increased to 5000 rupees. Provision for doubtful debts decreased by 1500 rupees. Provision for doubtful debts decreased to 2000 rupees. So, like this, we will get questions on adjustments on PDDR. And in your exam, so in world balance sheet, we will get information like this. Under asset side, datas, they will give certain amount. That is, here I have taken 80,000 rupees minus provision for doubtful debts 3,000 rupees. In outer column, they will give certain net datas, that is 77,000 here. So what it means here, already we are having certain old provision for doubtful debts, and these are new provision for doubtful debts. So this adjustments information we need to consider in two statements, that is in admission partnership we will prepare three accounts, that is a revaluation account, partners capital account and balance sheet. So it is all about business, so we can't take it in partners capital account. So we need to consider one time in revaluation account and in balance sheet. Let us solve one by one. First one is provision for doubtful debts increased by 10%. So here this word is important, by, which means already they are saying difference amount here, difference percentage. Already we are having 3000 rupees plus 10% of debtors. On debtors, PDD should be created, that is, so debtors value we are having here 80,000 rupees. Debtors value we are having 80,000 rupees into 10%. So we will get 8,000 here. Already we are having 3,000 here, and again 8,000 is we are creating, which means, so as we know that revaluation account is a nominal nature of account. All expenses should be taken under debit side, all income should be taken under credit side. So if you are creating provisions towards debtors, which will become expenses or losses we can consider. So this much losses we are getting, provisions we are creating, so we need to take under debit side, that is provision for doubtful debts. So here by word is important, so they are directly saying this much amount is increasing. In revaluation account we should consider only what is the increase in the value of assets and liabilities. So it is increased by 8,000, so directly we can take here. Under debit side we need to take 8,000 directly because it is by 10%. 10% means 8,000. In balance sheet, so debtors amount we need to take, that is 77,000 minus provision for doubtful debts. So already 80,000 was there, 3,000 deducted, and now net debtors is 77,000. In that we need to create again 88,000. So which will come 69,000. This is first adjustment. If they are saying by, we can take direct amount here directly. Then second one is provision for doubtful debts maintained at 30%. Here they are not saying how much it is increasing. They are saying total it should be 30%. Let us calculate. So debtors value we are having 80,000 here. 80,000 into 30% we will get 24,000. So data should be, provision for doubtful debts should be 24,000, but already we are having 3,000 here, which means, so again we need to newly create 21,000 rupees of provision for doubtful debts. Out of 24,000, that is 30%, we are having already 3,000 of provision for doubtful debts here. Now we need to create only 21,000 rupees of new provision for doubtful debts. and this amount we need to take. If they are saying maintained at or increased to, if they are saying maintained at or increased to, so we need to consider difference value here. So what was the old provision for doubtful debts, what is the new provision for doubtful debts, what is the difference amount, how much it is increasing or how much it is decreasing, that value we need to consider here. So it is increased by 21,000 here, so we can write under debit side, that is PDD 21,000 only. Then in balance sheet, that is debtors, totally we are having 80,000 we can take, or 77,000 we can take. Let me take 77,000 here. Already this 3,000 deducted, it should be 24,000, but 3,000 already deducted minus PDD. So now we are creating only 21,000 here. Then it should be, net data should be 56,000. So if they are saying this, we need to calculate like this. And next adjustment is provision for doubtful debts increased by 2,000. If you see here, same words. So here in this provision for doubtful debts adjustment, we need to maintain one, we need to look at these words, whether it is by, at or to. If they are giving at and to, so we need to take difference value. So like this, if they are saying by, so they are directly saying how much it is increasing or how much it is decreasing, so we can take direct amount here. So in first adjustment they said percentage, but here they are saying amount directly, that is 2,000 rupees, it is increasing, means that provision is increasing, which means liability is increasing. So we should take in revaluation account under debit side, that is to provision for doubtful debts, that is 2,000. And in balance sheet it is simple, debtors, that is net debtors, here we are having 77,000 minus provision for doubtful debts, that is 2,000 rupees. So finally we will get 75,000 outer column. So if they are saying amount directly, we can take by if it is. Then in fourth one, provision for doubtful debts increased to 5,000. What they are saying means this is a present value of provision for doubtful debts, but already we are having 3,000 rupees of provision for doubtful debts, now it is 5,000. Then we need to find out how much it is increased. Then so presently it is 5,000, but already we are having 3,000 rupees. Now we need to create only 2,000 rupees of provision, new provision. So this amount we need to take, not 5,000 here, because already we are having. So to provision for doubtful debts, that is 2,000 here. And here same, 77,000 minus 2,000 we will get 75,000, or else 80,000 minus 5,000 we will get 75,000. So we can do in a both manner. Then fifth one, that is provision for doubtful debts decreased by 1,500. For example, so we have sold goods on credit basis to our customers. For example, let us take 80,000 here. Then our customer will become debtors. Now his business is going under losses, and now we are getting doubt that whether he will pay in future or not. So he said that in a few days back, he said that he is not able to pay 3,000 rupees. So we are having, if he say confirmly say, then it will become bad debts, but we analyze that he can't pay 3,000 rupees, then it will become doubtful debts, doubtful. So we are going to create provision towards that now. So now what happens is business is improving. So now if you are analyzing that, we come to conclusion that he is capable of paying 1,500 rupees, but remaining amount is not able to pay. So decrease it by 1,500. Out of 3,000 rupees, now he can't pay 1,500 rupees. Remaining amount he will pay. So we thought that he is not able to pay, but now he is able to. So which will become profit to our business, because we can recover it. So whenever provision for doubtful debts is decreasing, it will become profit to our business. So that's why we need to take under credit side that provision for doubtful debts. So we had 3000 rupees earlier. Now it is decreased by 1500. Sorry, dec- yes. So decreased by. So directly they are saying that this much is decreased. So we can take 1500 rupees here. So if they are saying by, we can take direct amount. So here in balance sheet, debtors, for example, 80,000 we are having minus provision for doubtful debts, that is 3000 we had, but now they are saying it is decreased by 1500. Then 3000 minus 1500, then remaining amount 1500 rupees, it will remain as provision for doubtful debts. So we need to take here only 1500. In case, for example, if it is 2000 rupees here, decrease it by 2000, then we need to take here only 1000 rupees as provision. So remaining amount, that is 78,500, we need to take in outer column. And last one, we are having provision for doubtful debts decreased to 2000. What they are saying here, so we had 3000 rupees of PDD, now it becomes 2000 rupees. Remaining 1000 rupees we can recover, which will become what? Profit. So profit means, our income means, we need to take under credit side in revaluation account, that is provision for doubtful debts. So earlier we had 3000 rupees, now it is 2000 rupees. Then how much it is decreasing? 1000 rupees. It will become income, and that one we need to in balance sheet. So we need to take like debtors 80,000. Now what is the value of provision for doubtful debts? They are directly saying that is 2000 rupees minus provision for doubtful debts, that is 2000 rupees. Then outer column it is 78,000. In adjustments, if they are saying, we need to take in two statements, one is revaluation account and balance sheet. So in balance sheet, that provision for doubtful debts amount we need to deduct from debtors. In revaluation account, whether it is increasing, decreasing, we need to observe. If it increases, it will become loss to our business, so expense side, debit side. If it is decreasing, it will become profit to our business, we need to take under credit side. So these are about adjustments on provision for doubtful debts. Thank you.